Thank you. I guess 2 years ago, no one would have expected someone from ICAEW to be talking at a conference on benchmarks. In fact, many of you probably don't know who ICAEW are. We're the Institute of Chartered Accountants in England and Wales, and despite the England and Wales, we have a globally spread membership. In fact, most of the time when I talk to a room full of about this number of people, we'll find at least one of our members in the room. I'm not going to ask you to identify yourself, but I'm kind of reasonably confident that there will be one of you out there. Well, what's happened the last 2 years is, well, firstly, LIBOR happened, as we all know, and often with assurance, when penalties come, when decisions come, regulators may just add in, and something will be reviewed by the external auditors, and this was no exception. The first penalty against one of the banks, I've promised that bank to stop mentioning their names because a number have followed, but when the penalty came out from the CFTC, it included a requirement that they must get their LIBOR submissions audited by both internal audit and external audit. And pretty simple to include in the rules, but the question is, how do you actually do it? And we started a project based on that one thing, because we could see that, we didn't expect it was just one bank involved, and more would come, so we could see other banks would also be likely to be required to get an audit of their submissions, and it may well become part of the rule book going forward. So we started a project to develop guidance on actually how to provide assurance, working with some of the benchmark providers, and as let's click this on. There we go. So we had a steep learning curve about all the different types of benchmarks involved. At this stage, I should declare an interest, as well as writing guidance on assurance. ICAEW, we also provide our own index. So yeah, we provide a business confidence index, which we've been doing for a number of years, and I'm quite impressed that in a conference full of index providers, I'm the only one who actually has a graph on, and it's one of our charts, that our index that we're using. But this is it's not an index that's important to financial markets. It's an economic indicator, and it's been quite good at tracking what's happening in UK GDP as it goes through. And it's actually the first economic indicator to show the effects of the credit crunch coming through. We released it a week or so before some of the official data come out. So it's just a kind of example. I'm not going to say too much about this slide. We know the headlines, but kind of the important thing is that confidence has been damaged quite a lot, and kind of why we're involved in developing guidance is that as a profession, we see ourselves it's just in the strapline at the bottom is about business with confidence, whether it's providing high quality financial information through accountants, qualified accountants within institutions, or through the audit process that's providing confidence to financial markets about information provided by companies. So it's probably fairly natural that audit assurance would be seen as part of the solution. This is just a kind of quote from the weekly report. If you've got requirements for assurance, it's probably a good thing that different institutions do it on a consistent basis, and there are a number of questions involved in provision of assurance that I'll come on to. But we're trying to help bring consistency and bring a robust framework. Our guidance is developed based on international standards on assurance engagement, so it's not just us writing some of our own guidance. It is based on a framework, and we have in developing it, you kind of look at the control process, and yes, we get the point that different indices are different and work in different ways. But when you do look at it, there are some basic points that you have a process of gathering data, whether it's from transactions or whether it's other market information. You then you pull that together in a data extraction process. Then you assess it. You have an overarching governance framework and controls to support those controls over both the extraction of data and the assessment of data. You have a methodology underpinning all of that, and then it comes to some either, if it's in the case of the IBORs, you then a submitter will then submit it on to a compiler who kind of repeats the process, or some of the price reporting agencies, they will publish the information at that stage. So that seems largely consistent across benchmarks. The bit in the middle is where we're focusing our guidance. We're not looking at the underlying transactions to provide assurance on the methodology. And Pierre and Dan talked about the E&Y thing. It's about the methodology on at the benchmark area. It's not about what happens in the. It doesn't involve auditing the underlying transactions. Whether, and that's where we draw the line, whether it's for the PRAs extracting external data, or even in the case of the IBORs, it's to provide assurance on LIBOR, for example. It doesn't necessarily mean you need to audit the whole of the bank's or re-audit the whole of the bank's lending decisions to work at the extraction process. So it's saying that's outside the scope of what you would do. And also, it's important to know that anything that happens after you publish or after you submit, that can't be covered by by the assurance, which sometimes people forget in the people often like to blame auditors for anything whenever anything goes wrong, and auditors are a risk-averse bunch as well as everyone else. So it's important to know what's covered and not. And you can have external oversight. We've heard enough about that already. There are some important questions to look at and work out if you have audit or not. Basically, you need something to report on. You need something to report against. Auditors, we need our own benchmark against which we report, and you need someone to report to, which is fairly obvious, probably. There's more technical questions on the level of assurance, reasonable versus limited versus agreed upon procedures. Reasonable assurance is something that looks like, it's kind of equivalent to what you might see in a company audit report. The problem is there isn't an equivalent to, I believe this is provides a true and fair view, or fairly presented, whatever. So it's that it's a positive opinion. These comply with the control framework, comply with the statement of principles, whatever. Limited assurance is it used to be described as negative assurance, saying we've done all this work, nothing leads us to believe they don't comply. And agreed upon procedures is kind of, we've done all this work, this is what we found. So if you're going to ask for assurance, you need to actually decide, well, what type of assurance do you want, because that will determine how much work is required. And there are some areas where it's quite difficult to reach reasonable assurance on. And the scope is also important. In data versus controls, are you reporting on the output of the benchmark? Are you saying, the numbers that are produced by Platts, for example, comply in full with the IOSCO principles, or are you saying that Platts processes are comply with the principles? It's easier to provide an opinion on the controls than the data, because to do the data, it is a bit different to financial statements audit. to provide an opinion on the data, it kind of implies that in each and every submission point across the period covered is okay, and you need to look at each and every data point to see those, because they're almost independent of each other. Financial statements, it all adds up over the time, so you'd pick out day-to-day fluctuations, hopefully, but so that's, the scope is quite important, and it's easier to get reasonable assurance on the processes. How you document it, documentation is quite important. It helps the assurance process. So, this is basically just running through. I've worked out how this works finally. It helps to kind of map from the controls you've got back to the principles, or principles to controls, with objectives in between. Are just the final points. I mean, we produced interim guidance in February. We're about ready to finalise it. It's structured so that we can add different bits. A bit like the Commission proposals, we've got sections on. There's a more general one plus specific sections on oil PRAs, and we did a lot of work with the oil PRAs in over the summer to work that out, and also working with IOSCO and others, section on the IBORs. It's it's structured so that there can be do more things, but I will draw stumps of this because I know that some of you are keen for questions.